Alicia.
Hi, Bill. I'm doing wonderful. Thank you.
I got to practice my hard P's and my T and
And rolling the
C's
R's.
and rolling the R's as a gringo. Hey, we have this home buying seminar every Wednesday, 5 p.m. Pacific time, 8 p.m. Eastern time, and we live stream it onto Facebook and YouTube and such. And what the goal here is to help you buy your first house, your next house, by offering vendors and partners and also answering important questions that may or may not be holding you back from making a move. And so today, Patricia and I want to talk a little bit about interest rates. So how about those interest rates, Patricia?
How about them, Bill? Today we are at 5.27% for a 30-year fixed.
Yeah, I want to kind of share with you a little, my background. I started in this industry as a mortgage lender. And when you're in the mortgage business, you watch the rates every day. And so at first I wanted to show you kind of over a 5-year period. In fact, the maximum this chart has is back to, I started the business in 1984, right there. And rates were 13.4%. And I remember when rates came below, actually, I think I misspoke. I started in 86. Yeah, 86. Rates came below 10%, briefly in the back and briefly. It was like a national holiday, such a big deal. We had lived this whole time period with rates in double digits.
Mm-hmm.
And when rates came below 10, it sounded so much more affordable. And you can see that ever since, it's been a long, steady decline with some backups. And then the question is this a backup or is this a new direction? We don't know. But you can see over the long run, for the last 20, 30, 40 years, rates have almost steadily come down. And so a couple of things. One is there are people like me who our career, mostly rates have been down. They're lenders who've done nothing but they would meet customers and refinance them every 6 months, a year when the rates came down to a new low. So you have a whole industry and a lot of mortgage players who really don't have the ability to help people buy houses. They really are focused almost exclusively on refinancing their current customers. And because rates are going up now, they can't do that anymore. And so they're struggling to figure out how to help people. And then you have this population of mortgage lenders who work with purchase customers who are able to help us. It's a small percentage. We want to make sure we work with those. We'll take a look at the same graph in the last 5 years. And you'll see that over the last 5 years through the COVID period, rates have been straight down. And then now they're higher than they've been in any time in the last 5 years.
Mm-hmm.
Then if you look at
refinanced my loan, a few years ago, we were at 4%.
Well, if you bought, say, in 2018 at 5%, at some point you could have refinanced at 4.5 or 4.25, or maybe you got lucky down the 3s or very lucky down the 2s. And so people bought these houses, basically got their mortgage payment reduced for free over a period of time if they took advantage of it and they were prepared for it. And you can see since it's turned around. Now, if you look in this current year, it's gone almost straight up. We're down into the under 3s and we've moved up. But here's an important thing I want to just point out, that since April, it's been about flat or come down from the highs just a little bit. They were 5.25, down from a high of about 5.5. Not predicting the future. I do have a crystal ball over my shoulder that you'll see I have a crystal ball, but it doesn't tell you where rates are headed. Really important to notice. It doesn't tell you that. In fact, and if you look even a shorter time period, let's go here, 2. You can see what this year looks like, right? Almost straight up, and then it looked like it's plateaued in the last couple of weeks.
Mm-hmm.
So a couple of things I think to pay attention to or decisions to make of this. One is you need to decide if the interest rate makes sense for you. Now, the increase in rates is going to slow down the appreciation of house values. Housing values are going up 15, 20% a year. They're projected to go up only maybe 10% this current year. But if it makes sense for you to live in a house, and to buy the house, and to finance it, maybe you get a different loan. Maybe you get a 15-year fixed or an adjustable loan at 7 years with the hopes of being able to refinance it into 30-year in the next couple of years. But as long as you can afford the house, then that's the key thing to look at. Housing prices are projected this year by almost all the prognosticators to go up minimum 5%, but most of them, the average is about 10%. So if you're borrowing money, and think about it this way, you buy a house for $800,000, you put 10% down, you put down 80, you're borrowing 720. But if you're borrowing money at $720,000 at say 5.5% or 5.25%, and the house goes up in value 10%, that's called arbitrage. You've made money on the increase of value of an asset where you borrowed money at a fixed cost. And if rates go down, you could refinance again and lower your rate. No guarantee you can do that, but that's what's happened for most people in the last 20 years. And so it's important, I think, to get out of the emotions into the business of this and look at the data. The data does not say rates are increasing, but they increased. And maybe they'll continue to go back up. Maybe they've peaked. Maybe they'll go down. I have a crystal ball. Crystal ball doesn't tell us. But nobody really knows. The key thing is, can you afford it now? And with real estate, the reason why this market has nothing 2000, 2008, and 2009, nothing like that at all. I was in the business then. Most buyers who were buying houses then couldn't afford the house. They had a kind of a gimmicky payment they could afford temporarily, and they expected they had to refinance a year later in order to continue to afford the house. Or they didn't know the loan. They didn't understand what their options were. They got caught short. And it was kind of a game of musical chairs. Once the chairs stopped, people didn't have a place to go. They lost their house. Then one, then another. That drove prices down. The difference with today is almost everybody who bought a house in the last 5 years qualified on a 30-year fixed payment. And many of them refinanced and got lower payments. And all those people who bought houses, almost all of them, the house went up in value. They have more equity than they started with. That was not true in 2008. So again, I'm not here to tell you, no matter what, buy a house. If you can afford it, it makes sense for you and your family. If you can afford the payment, the lenders won't lend it to you unless they can afford it. Use them as a check. You have the security of knowing that you can afford the payment. You have the opportunity, if rates ever go down, perhaps to refinance to lower payment. You should be able to enjoy appreciation where the money you're borrowing will finance depreciating asset. You get all the other advantages of owning real estate. Patricia, what do you think?
Yep, I think you're absolutely right, Bill. And I just know from my prior experience as well, with buying a home. And their interest rates have, everybody's saying that they're increasing, they're rising, they're spiking. Right. But the truth of the matter is that they were so much higher, years ago. And I know that from personal experience of buying my own property back in 2003. I mean, the interest rate that I paid was more than 5%. And I also wanted to mention, I have a client that was referred to me by another realtor. So I'm working with this buyer and they were issued a loan approval in January of this year. So now we're, 4 months down the road. And I'm looking at the pre-approval and, it seems pretty basic. So I call the lender to verify the information and just find out more about the buyer's qualifications. So after talking with the lender, come to find out that he has not filed his taxes for last year.
Oops.
And he's in the medical field. So I'm not even sure how he was going out and actually putting offers on properties with this pre-approval that is actually not valid because it was still pending more financial documentation. And so I think it's just really important when you're working with a buyer or a lender or whoever your team is, you really have to get down into the details of the qualification for the client, because that could ultimately just blow the deal for everybody. I mean, especially the buyer, they're looking to get into a home and they were actually out looking at properties and making offers. But they were not going to qualify based on the fact that they still haven't provided or filed their taxes for last year. And that was one of the requirements for getting the pre-approval. But I think, because there's so much competition right now, especially with lenders. And as you mentioned in the past, last year and the year before, a lot of the business was just from refinances because everybody was just looking to get that lower rate.
Right.
And so under pressure, this lender provided this loan approval, but it's actually not even valid. So they're working on that right now.
It is amazing. I'm primarily a listing agent, and so I often get other companies, materials, offers, and pre-approval letters and such. And it's crazy to me the stuff they send to me, and then when I call them, ask a couple of questions, they fold like a house of cards most of the time. Just today, I was talking to a real estate agent who's changing companies, joining our team. And I was asking about his lender, and I asked him, does his lender contact the listing agent when they make offers? And he said, yes. I said, great. That's a minimum standard. It used to be like a big deal that your lender would do that. But really, that's a minimum standard. As a listing agent, I would never, ever accept an offer without talking to the lender for the buyer that we're going to accept. I might not interview all of them, but before I accept one, I'll call that lender and make sure he's legitimate, make sure they have the paper together. What does a pre-approval include? What's it not include? Get some timelines nailed down. And so that's what we've had on here. I know we had Caitlin Chen. She will contact the listing agent for you. We also had, who was the agent from San Diego from US Bank?
Rosie.
Rosie's fantastic. She'll also call listing agents. Those are purchase lenders who it's in their blood to do what it takes to get deals approved. So you want to make sure that your lender's doing their job to get your deal approved. And there are a lot of lenders right now who are desperate, who'll throw anything together because they've never really been through a purchase market. But you want to work with somebody who really knows what they're doing in the purchase market.
Yeah, absolutely. And this buyer was hot to go look at property and start, continuing that course of making offers and seeing what he can get into escrow with. But at this point, it's not something that he can proceed with. So I'm having to guide him through that process, going back to the beginning with refreshing all of the pre-qualification requirements so that we get a solid, valid loan approval this time.
And you'll talk to some of these real estate agents, and they'll tell you they've had 5 and 10 offers submitted with a buyer. And you think, well, yeah, but if you submitted 10 offers with a weak pre-approval letter with a lender, it's dated. I've seen them; they're dated. I've seen the pre-approval amount less than the offer amount. You're just wasting your time, and you're really, really wasting your buyer's time. The buyer's never gonna get a chance to buy the property and never know why, because your offer just looks stupid in some cases.
Right.
Sometimes if I'll text the agent, say, hey, by the way, your pre-approval expired, your pre-approval's too low. But generally, it's not going to, you're not going to find out. You're just going to be denied in a competitive market. Now the market's not as competitive, and listing agents have to work a little harder, and you're not going to get as many offers. And so this is the time. If you've been looking, yes, it's true. If you've been looking last year, you're frustrated, you made offers, and housing prices went up, and the payments went up. But it's also true, as most commentators projected to continue to increase. If you get in now, the price of the house 20, 30 years from now, it won't seem that significant that you missed by 6 months or a year. And if rates ever do go down again, you'll refinance down, it won't be that significant, the difference in the 30-year fixed rate mortgage. But you got to roll up your sleeves, and you got to get your paperwork lined up to get your offer accepted now.
Yeah. And I've also seen more properties that have had some price reductions in the recent months. I've seen a few properties that have gone back onto the market because the buyer fell out of escrow. And that could be one of these situations like what I was just sharing, where the pre-approval was not even valid. The buyer was still missing some of their pre-qualifications as far as financials are concerned, and they couldn't afford the property, or they didn't qualify to purchase a property, and they end up falling out of escrow. So I'm seeing more properties that are coming back onto the market where the buyer couldn't perform.
There you go.
So these could be potential opportunities for another client that, is just waiting for that opportunity, buyers or escrows that are basically being canceled.
And that seller's a little bloodied, and they're a little more agreeable, and they're going to make some concessions or maybe lower the price a little bit. So this is the time to, if you're out looking for property, this is the time to sharpen your pencil and jump in on it. You'll get what you're looking for more likely now than before. I saw a statistic that said the average offers 6 months ago were 10 offers per one accepted. And now that number's dropped down to 4 offers per one accepted. So again, this might be the chance for you to get your deal accepted. Hey, this is meant to be participative. So if you have questions, Beverly or Chris or Raina, feel free to either put in the chat box or raise the hand on the Zoom, or just unmute yourself and jump in family style. We'd love to answer questions. If you have anything on home buying in general or mortgages in particular, we're here to help you guys get the house of your dreams. Okay. And Patricia, you need to call all your friends at the escrow offices and see about their fallout deals. Find out what deals are falling apart and get a buyer on those deals right away. Yeah.
Yes. Get another buyer going.
That you want to move as quick as you can that transition. I know I had a buyer in the escrow and it fell out. And I had another one lined up and ready to go right away and got back in escrow, and that buyer fell out. So now here we are again. It's been a couple of weeks. I think we have another buyer to put it in, but that definitely as a listing agent, you're looking for the next deal. So you want to reach out, talk to your colleagues, talk to your friends in the escrow offices and find out if those deals fall apart.
Yeah, absolutely.
Okay. Any other questions on interest rates or the purchase market or anything I can help you with? No, not seeing any.
I don't see anything in the chat box.
No. Okay. Well, that's okay. It could be short. I just appreciate you guys joining us. We do this every week, every Wednesday at 5 p.m. Pacific, 8 p.m. Eastern. We record it. But feel free to bring questions if you have it. We bring vendors on sometimes to connect to you. We also talk about different items. Today we talked about interest rates in the market and how rates have gone up. As of now, they're a little below the peak. So perhaps it means that we've hit the market top and now we're stable for a while. Maybe it's going to go back down. I have a crystal ball. And it won't tell me where rates are headed. I ask it all the time. Come on, rates went up or down? Yeah, no, it's like a stupid.
No reaction. No reaction.
No reaction. For years I used to say I don't have a crystal ball. It's one day I saw on Amazon a crystal ball. I said I got to buy that just so I could tell people I have a crystal ball. And I still don't know the answer.
Right.
So are rates going up or down? I don't know. Here's what I'll tell you: in the long run, in California, real estate's going to go up. That there's going to be more people, and they're not building any more land. They might build more houses. Even that, very unlikely. We don't have enough water. We don't have enough electricity. The politicians would have less houses. They want less cars. They want less. We're not building any rail anywhere. So, unless there's more houses, it can't really go up and it can't go down in value. California real estate is going to be a great investment for the long run. So feel free, if we can help you get there, we're here for you. Okay. Any last words, Patricia?
Yeah, I just wanted to mention, I read an article recently that said that basically the adjustable rate mortgages are coming back, and that's how buyers are able to combat these higher interest rates and afford a mortgage payment, because you might have a fixed rate for 5 years or 7 years, and after that it jumps to an adjustable rate. So, again, it all depends on what your qualifications are, what the payment looks like for you that you can afford. But that may be another route that you can take in trying to get, a home loan approved and getting a payment that works within your budget. So
it's a great suggestion. The adjustable rate mortgages have a bad reputation from years of abuse by lenders, rightfully so. There were loans that we called negative amortization, where a buyer would take a loan out, maybe borrow $300,000. At the end of 3 years, they owed $320,000. Negative amortization meant that the loan balance went up, not down. And I would have buyers come in my office all the time. I don't understand how this happened. I bought a house with somebody else and never explained how the loan worked. Those loans have almost completely gone with the mortgage disaster 2008-9. They went away. There's another type of mortgage where you would apply and it would jump up in payment. So you start off with the interest rate of 1%, 2%. It would jump to 5 or 6%. And then the idea was we could refinance before that would happen. And people were able to refinance every 6 months or a year. And they never had to see the actual payment. They couldn't qualify. And in those loans, there were no qualifying. There was no income documentation, no asset verification, poor credit was okay. So people were getting in houses they couldn't afford. The payment would go up even more. They really could afford it. They'd give the house back. Those aren't the adjustables today. Today, the adjustables, the only ones available, are fixed typically for 7 years or 5 years, where it's a 30-year loan where the payments and the interest is fixed for 5 or 7 years. Now, if you know that you can move or sell within 5 or 7 year period, you're going to be reassigned, or it's likely rates will come back down again for you to refinance into a 30-year fixed rate mortgage. It's a great interim opportunity. And that's why those loans are being created. They're not like the adjustable mortgages of the past at all. They're much safer, much better options for buyers today than they were in the past.
Yeah, and lenders are being more diligent with how they're pre-qualifying the borrower rather than just giving out a no stated income loan. I mean,
Definitely.
you really do have to qualify for the loan, provide full documentation to the lender in order to get the loan pre-qualified.
Yeah. Okay. Any last call? Any questions? Not seeing any. Raina, does your daughter have a question she wants to pop in with? No? Okay. Okay. Well, look, it's a pleasure seeing you guys. Thank you for being on the call today. If we can help, Patricia, how do people get a hold of you?
Thank you.
Hi, Raina. So I can be reached on my cell phone, and that number is 323-365-9909.
Great. Bill Gross. Thanks so much. I'm Bill Gross at Bill Gross EXP on YouTube. Thanks, guys. Make it a great week. We'll see you next week.
Thank you, everybody. Thanks,
Bye-bye.
Phil.